Shall we kick off?
Yeah, I think good enough, close enough to.
Amy, do you want to do any preliminaries or shall we just launch into this?
I just wanted to thank you guys both, Ron and Jerry, for agreeing to do this. Ron had some insight, Jerry had some insight on that state side. Um, and they were both real amenable to talking about those things. Box 14, big mystery around that one. So um, looking for that clarification. So thank you both for agreeing to do this.
Yep, my pleasure. So, Jerry, you want to kick it off?
Okay, I'm going to try to share my screen. Let's see how this goes. There we go. Okay, so I'm here to talk about the mysteries of the W-2 Box 14. That's a very, very narrow topic. I've done a lot of the research. I've done enough research that I can get this down under 10 minutes, I promise. And I think you're going to find this is pretty basic. Box 14 is this. How do I advance here?
You can hit your arrows.
We're talking about this guy right here. The W2 box 14 is the other box. This is that box that has all those strange codes in them, the strange numbers. And then when we try to input this into TaxSlayer, we find that we have this slide and we have this drop-down box, other, and we can never find the code that matches what the W2 has in front of us. So what we end up typically doing is we put it in this other, not listed here, the other in the other box. We type in the amount. Sometimes we aggregate those amounts, and that's just fine. In fact, that's the bottom line. If that's what you're doing, if you're putting all that information into the other box, in the tax layer, then you're probably doing it right. And I would recommend you keep doing that unless the code is an exact match. But why are we even doing this? What is this box 14 even used for? Well, the IRS says box 15 is for whatever the employer wants to tell the employee. They can put in union dues, health insurance premiums deducted, minister's allowances. They can put in things like pension plans. They can put in Aunt Martha's brownie mix, whatever they want to put in there, they can put in there. There's really not a lot of guidance for what they can put in there. And when it comes to pensions, some states, it's very important that that information is in box 14, but not Ohio. And I'm going to talk a little bit more about that. So what do we see when we go to TaxSlayer? Well, we see this list of codes. There are 23 codes, and you'll notice that of those codes, there are 16 of them that are state specific. There are 11 states that have specific codes: California, Maryland, New York, Washington, all these things. And if you find in the W-2 you have in front of you a box 14 that has that specific code, then by all means, click that code, type in the amount, and let TaxSlayer do its magic, and you're done. All the math will be done, and you've done the right stuff. Easy peasy. The chances of you actually finding one of those is like finding a unicorn, I think. It's going to be very rare. There's a temptation when you have an Ohio W-2 to look at it and say, well, wait, there's something that looks familiar here. Like when box 14 I'm looking at says 414H. And if you look under New York IRC 414H, hey, that looks like what I've got. I'll type that. Don't do it. It's not an Ohio 414H. It's a New York 414H. Unless it says NY 414, don't use that. Put it in other, not listed here. So let's take those off the plate and see what's left. Well, clergy housing allowance. As it turns out, Pub 412, page VII, page 8, lists scope, and it says ministers' W-2s are out of scope. So if you have a W-2 that says clergy housing allowance in it, talk to your site coordinator. That return is probably out of scope. So let's take that off the table. What about these? These are the Railroad Retirement Tax Act situations. And now this is a little less unicorny. You might actually find something, a W-2 with this in there because some people are working for the railroad. And let's not get confused. We're not talking about the RRB 1099-R with its two tiers for retired railroad employees. These are people currently working for the railroad that have W-2s. And again, if you see these specific codes in box 14, click the code, type in the amount, and let TaxSlayer do the magic it does, and you're done. Okay, so let's take that off the table. That leaves this retirement carry to Form 8880. Now, this is where I got a little confused, and to the extent I have sown confusion, I apologize. Let me clarify. I wanted to find taxpayers as much tax relief as I could possibly find. And when I found something in box 14 that said RET or 414H or something else that indicated a retirement, I wanted to put that to Form 8880. Why? What's Form 8880? Form 8880 is the saver's credit. And if you forward that information to the 8880, you can get up to $1,000 of non-refundable credit. If you are a modest income, no more than $38,250 AGI for a single taxpayer, more for head of household or married filing jointly. But if you forward that money, that code to 8880, you might be able to save the taxpayer money. Don't do it. Why not? Well, first of all, this has to be voluntary. It has to be a voluntary donation. And if you're working for OPERS, for example, if you're working for the state of Ohio and you're under the Ohio Public Employees Retirement System, those contributions are no more voluntary than Social Security is voluntary. Remember, if you're working for the state, you either have OPERS, you don't have Social Security. And it may be that you have a voluntary component that you can contribute, but voluntary components are reported in box 12. Box 12, which we're all very familiar with, has codes like D for 401k, for elective deferrals being another expression for a voluntary contribution. It has E for elective deferrals to a 403B for public employees, public schools, and others. There's code G, F, H. All of these are already listed in box 12. And if they're listed in box 12 and you type them in, they automatically roll over into 8880. I've tested it. That's how that works. So employers are required to list these in box 12. Why would they list them in box 14? It's much more likely that they're going to list information in box 14 about involuntary contributions or the contributions that they, as the employer, are providing to the employee, because employers like to tell employees how much they're investing in their employees. It makes perfect sense, but it's not going to help them when it comes to the saver's credit. That leaves, what about this box? Well, okay, so if I have something in box 14 that says retirement, 414H, or some other thing that looks like a retirement, can I click this do not carry to Form 8880? Yes, 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 you can click that. But frankly, you can also click other, not listed here, because it has the same effect, which is it doesn't do anything with any tax consequences at all. So either one is fine. So I would suggest that you do not use this carry to Form 8880 unless you have some very specific guidance to the contrary or other extraordinary circumstances that I can't imagine. I mean, maybe a letter from Oprah saying, hey, we screwed up and you have to put it in box 14. I can't imagine it happening. I don't think you're going to find that unicorn anywhere. I don't think you're ever going to need to do that. The bottom line is, unless the code is an exact match from the W-2 box 14 to the TaxSlayer box 14, if it's not an exact match, just always use other, not listed here. That's it. Any questions?
I was just wondering if anybody's ever seen anything where a code actually matches, because I never have.
Nor me.
No.
And I went 8 minutes.
Well, thank you, Jerry. That was helpful because I've always just been told that it's like FYI information for the IRS, not necessarily for the taxpayer. Yeah, and then the voluntary versus involuntary makes a whole lot of sense.
I'm still waiting for Aunt Martha's brownie mix.
Anybody else have any other questions about box 14?
Thanks for clarifying that, Jerry. That's really helpful.
Yeah. It is, and then we can all spread the word at our prospective locations if it ever comes up.
Ron, over to you.
All right, thanks, Jerry. And that was an amazing presentation. Like, wow, you spent a lot of time doing that and the slides looked awesome. So what I'm going to do today is I'm going to talk about other topics in the Ohio tax return. Basically, let me go ahead and share my screen. Boom. Okay, can you all see that? And then why do I have a, oh, good. So that went away. So my presentation is gonna be a lot longer than Jerry's. So because there's a lot of things that, um, are involved in the Ohio tax return. But what I want to do is basically just give a basic outline of the Ohio tax return, the common additions and subtractions from income, the review the common tax credits, and kind of show where these adjustments are entered into TaxSlayer. So to begin with, let's say part of the Ohio tax return is you have to get the correct school district. So we are all in, hold on, let's see, can you see my little cursor if I move it around like that? Okay, so we're in Cuyahoga County. I'm not from here, so for me, it's like, oh, there's these other counties around Cuyahoga that I might encounter. Just be aware that, Lorain is kind of close over here, Medina, Summit, Portage. Geauga, I'm not sure that's how you pronounce it, Lake County. But within Cuyahoga County, there's a myriad of school districts. And a lot of times it's not quite clear which school district to select. There's a web page called the Finder from Ohio tax.ohio.gov /help center and /the Finder. You can input your address into that finder. It'll tell you what school district it exactly is. So the finder does not tell you what county the address is in. And the preparer can basically, you can enter, it'll tell you what code for the school district. But if you put that code in, it makes it maybe a little bit more difficult for the person doing the quality review to verify that that's the correct, school district. I've also noticed with the Finder, if you select an address really close to the line between one school district and another, it'll give you both school districts and it says it can't determine which school district it goes into. So you may actually end up having to ask the taxpayer if they know what school district they're in. But basically to do that, you select school district. This little area up here lets you to toggle back and forth. You select address, you type in your address, 6107 IRA Avenue, and the zip code. And this section up here, I think if school districts change from year to year, whatever, you could put in, hey, I want to, as of December 31st, of the tax year we're working on, that's what it was. It will give you the address. Here's the city is Cleveland, but the physical city is Brooklyn. It'll give you the Brooklyn school district and it'll give you that school district number that you can put in directly into TaxSlayer. or just select, Brooklyn School District from Cuyahoga County. So this is a map of all the school districts in our area, Cleveland Metropolitan. But you notice, look at these little peninsulas that kind of jut in and around and whoops, and around. Look at Cuyahoga Heights, how it kind of has this narrow little band that goes down that way. So it could be pretty tricky to figure out which school district it is, especially over here on the east side, which a lot of the, EITC locations are at. You're gonna get clients from those regions, and it might be a little bit more tricky to identify. So how do you do that? Well, you're gonna come to this, you put in the client's information, and then one of the next screens you toggle to is the Ohio return. You're gonna begin to verify the school district. You're gonna select, the county that you're in, that they're in, which is pretty much Cuyahoga. And again, you can select the school district, or this is where you put that code in, 1809 for Cleveland Metropolitan. That's where that's going to go in. Or you just select the school district from right there. And by selecting the Cuyahoga, you know that in this section, select school district based on county, you've selected the county. So only the school districts in that county are going to show up. Go ahead and click out. Make sure you click the yes block, that you verified the school district is correct, and then move on. Okay. So this is like an overview of just the flow of the Ohio tax return. They all start with adjusted gross income. You're going to have additions to AGI, deductions from AGI. That's going to give you your Ohio adjusted gross income. Then you're going to,
May I ask a question?
yeah.
Why don't we just ask the taxpayer in the interview what their school district is?
You could, and that could be recorded on the interview form.
But I haven't seen that on the form. I haven't seen it done. I haven't done interviews. I've only prepared. But
yeah, there's no place to put that on the interview form. They would have
It's
to.
because the federal does it.
Yeah, it's part of the federal. It's a federal form, and we're not. This is just focused on the Ohio portion, and the VITA program, I think, just deals with federal.
The other problem I also volunteer with AARP, and the other problem we have, because we have a majority of senior citizens, quite honestly, if they've moved because they've downsized, they don't know what school district they're in. If you don't have kids in school, you don't care.
I'm just concerned. I mean, we have to do that we do their state taxes, right? Their state taxes do get done, obviously. And I've basically based the school district on their address, but I'm sure I've got some of them wrong at this point because I didn't know about a lookup feature and nobody asks them what their school district is.
Yeah. I'm sorry I butted in, but only because of the AARP. The thing with the finder that we have found with AARP is if in doubt and you have the information, you can also type in the additional 4 numbers on that zip code. You know how they have the zip +4? The +4 does a better job at not giving you 2 districts.
Oh, okay.
Yeah, those last 4 digits are hard to come by too sometimes.
Yeah, they're almost always, again, I deal with more senior citizens than anything else, but they're always on the Social Security statements. So.
And you can look it up on USPS.com, the United States Post Office. If you put in the zip code finder, you can put the address in and the city, and it'll give you the zip +4 right from there to get that. Also, the driver's license, typically, I've noticed Ohio driver's licenses, they will, instead of, if it's Cleveland, it'll say Cleveland, but if it's, Brooklyn, it'll just say Brooklyn in there. It'll say Cuyahoga Heights, or it'll be specific to the school district too. So Lakewood, for example. So that's another way to find out. Or compare. So, okay, so anything else, or I'm going to press?
was
Good.
just gonna thank Carol for the last 4 digits of the
Yeah, thanks, Carol.
zip code. I never would have considered that.
Yeah. Okay, so let's see. You get Ohio AGI, you subtract any exemptions to get taxable non-business income. There's a line, at the bottom. There's a line taxable business income, but Ohio doesn't tax business income below $250,000 single or married filing jointly. It's only married filing separately, it's cut in half. So this is the form, this is where the school district goes. And then page 2, you start out with taxable non-business income. Then you're going to get a tax. You're going to subtract any non-refundable credits. And we don't deal with refundable credits, and I'll come to that at the end of the presentation, to get a total Ohio tax. And then we're going to subtract any tax already withheld to determine whether they have a total amount due or a refund. So that's just a kind of just the overview how things flow through the Ohio tax return. Oh, Jerry and I came up, or Jerry, somebody had made estimated tax payments in Ohio, and we struggled to figure out where to put those in. So this is where they go. They go in this payments and estimates section right down there. So you payments and from here, this is if you have somebody that has federal estimated tax amounts, it'll go in the same area. You just select that estimated tax payments for the state. It has all your quarterly places you can put this in. Make sure you select Ohio, and then you're done with that section. Good. Boom. Whoop. Okay, so now we're going to move on to additions. We're not going to see these ever. These are just two potential additions that you may encounter just because of our clientele, what they do, their income level, that kind of thing. The Section 529 college savings plan addition. These are savings plans managed by the state of Ohio. And if for some reason they had taken money out of a college savings plan and not used it to pay for qualified higher education expenses, they've got to add that back to their income to get taxed. And they would enter it right here. So if they had income from a college tuition or college savings plan, like interest income or dividends or something like that, they can adjust. I mean, this would be additions, but they can adjust based on their federal. If it was added to federal, they'll be able to deduct it from state. Now, that's actually a different section. Okay, so the next section that we may never see is non-medical withdrawals from a medical savings account. And these are really the Ohio medical savings accounts. We used to have medical savings accounts back in the day, but for the federal side, they ended in 2007. So basically it's, there's Ohio has its own MSA program under the Department of Insurance for Ohio. And so these are, whoops. Oop, I got that little box wrong. I gotta fix that. It should be down here, right there. This is where if you had, medical savings account amount that was not used for non-medical purposes, you have to add that back, and it would go right into your additions for income. The big thing, or the second most common adjustment or deduction we're going to see is the business income deduction. And that is business income like Uber, Lyft, maybe landscaper, some sort of service business that the person collects a 1099 NEC, or he ultimately develops a Schedule C for federal. And for these, we're going to just ensure that the federal Schedule C, the net profit, is input into TaxSlayer in the Ohio section. The business name is going to be is the name of the taxpayer, and then the percentage of ownership is 100%. So here's an example of a Schedule C profit and loss for business. And this example, it's this taxpayer has $1,168 of profit from this business that he has. It's his name is, name of proprietor, Joe Ohio. He's a flooring contractor. But this is where how you put that in. Your start from the state return. It's a deduction from income. So once you get to that big table of all your inputs, subtractions from income, you're gonna go ahead and select that, and you work your way down to all these deductions to the bottom, and there is Ohio business income right there. You're gonna have to go ahead and edit it, and you're gonna enter the business name, which is Joe Ohio. That's his name, and then make sure that he's owns 100% of the business, and then put in the profit or loss from the business, and then you're done.
And that generates the QBID.
Yeah, it reduces his income for the year on the state of Ohio portion. Hold on a second. Do I have?
I'm sorry, I guess the QBID is federal, not state.
Yeah. So it's going to go right, this deduction line right there. It's going to appear as an aggregate. All the things that reduce income are going to show up on this line right there of the front page of the Ohio return. So, and let's see. Boom. If I can bring that, we can go over the additions and deduction section, the pages, page 1 and 2 at the end of the presentation. Another reciprocity rate wages, if somebody is out of state and they filed and their employer mistakenly withheld taxes in Ohio, we can basically use this portion to deduct, filing an Ohio tax return, deduct the amount that was improperly withheld and sent to the state of Ohio from somebody, like in Pennsylvania or whatever. And likewise, if we have an Ohio resident who did work in Pennsylvania and the Ohio business deducted for the state of Ohio instead of the state of Pennsylvania, we can deduct that amount right here in line 14 to get him that money back. But he's going to ultimately going to have to pay that money to the state that he's a resident of. So line 16, taxable Social Security benefits. Ohio does not tax Social Security benefits. So TaxSlayer calculates this amount automatically, but just be aware that, it's right there and it's going to flow to offset that amount that's in page 1 of the federal of the taxable Social Security amount. In lines 25 through 35, we may encounter federal interest and dividends exempt from state taxation. There's a section in where it's in TaxSlayer in the Ohio portion, just like the retirement income credit, where it gives you a hint of like, hey, this might be the amount you're looking for to put in this box, but it's really up to the preparer to know or to decide if it's if the interest and dividends are deductible for Ohio. And essentially it's federal interest and dividends that are exempt from state, like what would it be? Bonds, government bonds, things like that. This came up kind of recently. Military retirement pensions, line 33, that is fully deductible in the state of Ohio. Ohio does not tax military retirement pensions. And there's other components of military that Ohio gets, Ohioans get a reduction of, or if they're stationed here and their spouse gets a job, their spouse income is not taxable in Ohio as well. So a 529 plan is a college savings plan, and they're managed by the states. So there's no, they're not deductible off of for federal AGI. Pardon me. So you can deduct deduct contributions to the 509 plan. Additionally, deduct any income that 509 plan generates, like interest income or dividend income, if that income shows up on the federal form as income somewhere you got a form, then you can deduct it additionally off of your Ohio 529 plan line right there. So let's see. If the taxpayer received a Pell Grant and or the Ohio College Opportunity Grant, those are typically the portions used for room and board are typically not deductible for federal, but they are deductible for state. So in this case, those portions received and used to pay for qualifying room and board expenses are deductible, including meal plans furnished by the educational institution. So that would go in block 37.
Ron?
Yes.
I have to leave in a couple of minutes, but I wanted to point out something with that 529 plan.
Uh-huh.
You can only deduct up to $4,000 in a given year. If they've donated more than that, it will carry forward. So remind the taxpayer that if they set up a $5,000 plan for their grandchild, they can deduct 4,000, but make a note that they should make a note that 1,000 should be brought back next year.
Okay, it'll carry forward. Fantastic. Okay, awesome. Thanks.
Sorry.
No worries. No, that please point it out. I am not a professional here. So
I set up 529 plans for my grandchild.
okay. So let's see. So and then yeah. So Ohio educator expenses, and I had no idea about this. For federal, the standard knowledge is that you can deduct $300 per educator for federal, and anything else doesn't carry forward to Ohio. But Ohio allows an additional $250 per educator for educational expenses. Qualifying a qualifying educator works 900 hours a year, which is approximately 113 days at 8 hours a day during the school year. So you can input that additional amount into the Ohio portion of TaxSlayer. You can input more than 500. Like if you put in an 800, only 500 will show up on the return. But the bottom line is you can't commingle, you can't pool the expenses if one has a lot of expenses and the other one doesn't. It's just per educator up to a maximum of $500 per educator. And I'll show you that here's the federal portion and where that goes. And I'll show you, I try to enter $550 and it gives an error. So it does not allow you to proceed unless you have $300 or below in the federal portion.
And how'd you get to that, Ron? And adjustments, okay.
Yep. I think, and oops. I thought, is it down here? It must be down. It must be down below is where you click on that to get adjustments. Okay, let me time out here. Let me move this back to. So for Ohio, from the state portion, you do the editing, you click on it. You've already verified the address to be correct. Get to the main table of contents. We're doing subtraction still. And here's all, when we're talking about all these subtractions that we're talking about in this section, it's just a whole list of stuff, Here's military pay for Ohio residents received while the military member was stationed outside of Ohio. The whole gamut of deductions from income is on this page. And there's a few more at the with links, to the bottom. But basically it's right there. Here's your Ohio educator expenses, goes right in there. And if you notice, here's your business income, here's your unreimbursed, your healthcare deduction right there. But they all, oops, they all oh, are on that one subtraction from income section. There's actually a couple different ways to get to the business income section, but it's just easier for me to just go, subtractions from income that gets you there every time. And
Good.
yeah.
Thank you.
Okay. Line 43, unreimbursed medical and healthcare expenses. So this is an interesting and complicated topic. Basically, it's, Ohio allows the net unreimbursed amount for healthcare insurance, long-term care insurance premiums, certain dental, vision, and health insurance premiums, and then medical care expenses in excess of the 7.5% of federal adjusted gross income. So it includes the amount you pay for yourself, your spouse, and your dependents, but do not deduct any amounts paid with pre-tax dollars, such as a health savings account or flexible spending account. It's only, amounts that you have not received a tax benefit for. You can't anything that's paid by you but later reimbursed or refunded, or paid by an insurance or other person. So the Ohio instructions refer you to page 41 and this worksheet on page 41. And these sections right here, the first section, unreimbursed dental, vision, and health insurance premiums during any portion of the year in which you were not eligible for Medicare. So it's pretty much below 65 years old. You weren't eligible for Medicare or an employer-paid health care plan through your or your spouse's employer. But all of that net amount is deductible. Also, enter amounts in line 2 for unreimbursed long-term care insurance premiums. That goes right there. Anything else, insurance paid during the time period in which you were eligible for Medicare or an employer-paid health care plan through your or your spouse's employer are deductible. The unreimbursed portion is deductible in the amount in excess of 7.5% of your AGI. And then line 4, paid for medical care during the year, right, in the amount in excess of 7.5% of AGI. You're going to add these two lines together, right? But before you figure out whether they're above 7.5% AGI, then you're going to calculate federal AGI on this line and subtract that to get this line 8. And then the total amount that you put on line 43 is lines 1 plus line 2 plus line 8. That goes here. So this is an AARP kind of a decision flow tree that kind of elaborates all these amounts. The one that I'm focused on mostly is the Affordable Care Act, but also self-insurance, COBRA, those are all fully deductible, and they'll be put in this, what they call L1, and I'll show you where that goes in TaxSlayer. They all go in, they're fully deductible. The long-term insurance right here flows up to this block, which we'll call L2, right? That's fully deductible. That was line 2 right there. And then here's your medical premiums and medical care. Now, the AARP has a flow chart. It talks about Social Security, but really it's when it's in excess of 7.5% of AGI. And there's kind of an amount because 7.5% of AGI may not be where people are, their incomes are if they're collecting just Social Security. But in any case, what AARP recommends is that you input all this stuff into your Schedule A itemized deductions, and then the appropriate amounts will flow through to the Ohio worksheet. And I'll show you how to do that. Okay, so let's talk about our 1095-A. So the health insurance marketplace statement, basically, you're going to get down to box 33A and 33C. These are what matter. This 33A is what the taxpayers actually paid that year to the marketplace. Box 33C is what the taxpayer has been reimbursed that year. So the net amount is how much they've paid minus how much they've been reimbursed. And here's that equation from the AARP handout is box 33A minus box 33C. But there's also, you have to add in 1040 schedule line 2 schedule line 1A from schedule 2. And why is that? It's because they through the calculations, if they have received an overpayment after all those calculations have done, the taxpayer must pay more, and that adds to the Ohio deduction amount. And likewise, if for this section's for government section Schedule 3 of Form 1040, Part 2, Line 9, if they've received an underpayment and they're going to get more, right? They get a tax credit, that subtracts from the Ohio deduction. So this is Form 8962. This is what's included in the taxpayer's federal return from the ACA. Again, you have column line A, and it may be a single total up here, or it may be per month, but that's how much they paid the marketplace for marketplace health insurance. This column C is what they've already received, and then this section right here calculates whether the quantity that they should have received. So there's going to be a difference of what they received and what they should have received. If there's an amount in block 26, that means they have basically they reduces the amount they have to pay to federal. So they get some sort of credit, right? Which was this line reduces the amount of Ohio benefit. Whereas if they have to repay something, this is the excess advance PTC repayment. If the taxpayer pays more, ends up paying more, that actually adds to the Ohio credit. So the overall calculation is column A minus column F, right? Minus line 26 plus line 29 to figure out how much goes in that line 43. So let me so on your TaxSlayer page, on TaxSlayer program, you're going to come to this section, and we'll show you how to get there in a second. You're always going to select yes. Do you want to complete the unreimbursed healthcare expense worksheet? And then from L1, right, this little button right there is going to allow you to put in the amounts that from the AARP of line, whatever, box L1. This needs to be calculated to enter, and then you're going to put that in there. The amount from L2 is automatically flows from the federal Schedule A. If you put it into the itemized deductions on Schedule A, it'll automatically flow if this little box is selected, the little arrow or this little dot is selected. This amount right here, this is accident and health plan for your spouse, reimbursed by your spouse's employer, including federal adjusted gross income related to a accident and health plan for a dependent. I put a bunch of numbers in there. I couldn't figure out, it didn't seem to make any difference anywhere. So, but it's not part of anything that we would probably have to work with as far as the ACA. And then this is the amount of insurance, dental, vision, health insurance. If you were eligible for Medicare, this is that block L3 from the AARP flow chart. That amount goes right there. And then medical care during the year not included in the worksheet, all your co-pays, you're back to here. Doctors, prescription, labs, nursing care, hospital expense, medical aids, medical mileage, all that kind of stuff would flow into L4. That's this. You would open this up right there, or it would automatically flow. If there was, oh, sorry, it's distracting. If you had to make an adjustment, you could click on this and make an adjustment in that tab in there. So let's show you, let's talk about where this goes. So from subtractions for income in the Ohio return, scroll all the way down again to the bottom. Right, and then there's that section. Make sure this is selected as yes. And then for the ACA insurance portion, select that. And there's just a single block that you type in the amount and that's it. So all that just flows into that block. And then you go ahead and exit out of the return, exit out of the Ohio return. Any questions on that? I mean, this is a big chunk of information. Good. Okay. All right, we're gonna move on because we got miles to go before we sleep. Okay, line 44, Ohio Medical Savings Account. And this again, we talked about medical savings accounts. They did exist on the federal side, but they pretty much stopped since 2007, although there is technically still a Medicare medical savings account still in existence. But specifically, this refers to the Ohio medical savings account. When you go in there, it says for the Ohio, when you put in TaxSlayer, it's for the Ohio medical savings account. So any amount that would you put into that would be deductible. And then when, if it's not used for medical purposes, when you pull it out, it goes into the additions for income that we talked about in the beginning of the presentation. Don't confuse them with health savings accounts. In fact, it specifically says, do not include amounts deducted on your federal return for contributions to a health savings account. So, okay. Now we're going to get to non-refundable credits. And this is just kind of an overview of the first 15. This is pretty much the majority of what we're going to deal with our tax clients. The retirement income credit is the big one. These lump sum credits are in red because if we select these, if we accidentally put a credit here, they will never be able to, so the retirement credit, they will never be able to use the retirement income credit for the rest of their life after you do that. Same with the lump sum distribution credit. I guess they could be appropriate for somebody who is at the end of their life and will not ever need the retirement income credit or the senior citizen credit ever again. But say, just avoid the lump sum retirement credit and the lump sum distribution credit. Okay, more credits. This one might come up, the Welcome Home Ohio credit. Basically, if you buy a new house and you're one of the first 500 applicants, you can get up to $20,000 per home based on a first come, first served basis, but only to the extent the funds are available. And so if they fund it to $1 million, or I think it's like 5 million or something like that, it's basically the first come, first serve. If you buy a house, you can apply for that credit. Another one is the lead abatement credit. We may come across that if somebody has a you know, an older home they're fixing up or something. That's only what I could think of. Okay. So we're going to get to line 2, the retirement income credit. This is probably the most common credit we're going to work with. So it's for people that make less than $100,000 a year. They must have received income from a pension, profit sharing, or retirement plan. And this income was received on account of retirement. So a lot of the taxpayers that I come across, they're 35, they're 36 years old or whatever. They worked at a company and they had a 401k. And when they quit their job, the company said, what do you want to do with your $2,000 you got in your 401k? Just give it to me. And they get it, receive a 1099-R as a total distribution or whatever, maybe penalties. But because that's not retirement income, it's not because they retired, it's not eligible for the retirement income credit. It has to be received on account of retirement and included in your Ohio adjusted gross income, and you have not previously taken the Ohio lump sum retirement credit. Well, is there a specific age related to retirement? And it's like, not really. You know, you think about 59 and a half, but you can retire from the military, police, fire well before you're 59 and a half. And if the taxpayer is still working, like that guy who was 36 who took the distribution, it, you know, it may be difficult to justify calling it retirement income, but in the tax rules, it says the taxpayer can still be working to be eligible. So it's really up to the preparer to kind of make a good judgment. If that taxpayer is, you know, not is, you know, closed out their 401k and or failed to make a rollover or something like that, that amount will show up in the Ohio portion as retirement income, but the preparer has to know, no, that is not eligible for the retirement income credit. So let's see here. So to put that in, go ahead and select Ohio return. Bypass that, get to the whole list. We're still in, now we're in credits. We're going to go ahead and select credit, non-refundable credit. And those are the only ones we're going to end up using. It'll give you a little hint here. Whoops, where's my little, you know, federal taxable income. It, you know, from the federal side, this little hint populates. And this is what I was talking about for federal interest or federal dividends not taxable in Ohio. The interest thing will have a little hint down here as well. So in this case, all of it was qualified for the retirement income credit. There's state political contributions. Don't touch the lump sum credits, homeschool credits. Just go ahead and exit out of the return. And you're done. So any questions so far? We're good? Okay. Again, don't use the lump sum credit, line 3 or line 5, because they disqualify the taxpayer from taking a retirement or senior citizen credit for the rest of their life. And that's a big responsibility to put on me to say, no, sorry. Okay, line 4, senior citizen credit, $50, automatically calculated by TaxSlayer. Just, it's a nice thing to point out to the taxpayer that they got a little gift. Child care and dependent care credit. This is also automatically calculated by TaxSlayer. It's for taxpayers making less than $40,000 a year. If they earn between $20,000 and $40,000, it's only 25% of the amount on your federal form 2241 line 11, which turns out to be very small. So it's, you know, it's nice, but if you notice that they did get the child care and dependent care credit on the federal and it doesn't populate on the state, there was one time I keyed in an extra decimal or something on the like a social security number or something like that, and it wouldn't populate. So I had to put in the dependent's social security number or something like that, or it was in TaxSlayer in the practice lab. So it may not have been applicable to real life, but that happened. Just make sure if they get it in the federal, they should get, and they make less than $40,000 a year, they should get something, at least $1. So this is an interesting one, a credit. I haven't come across this yet, but if somebody loses their job in Ohio and they go and they spend money on vocational training, college tuition and fees, or course materials to, as part of as training to qualify as job training, they can qualify for this credit. All right. Campaign contribution credits, don't qualify local candidates and federal candidates, U.S. president, senator, representative. They can do 50 individually or 100 marriage filing jointly for the governor, lieutenant governor, secretary of state, auditor of state, treasurer of state, attorney general, the justices of the Ohio Supreme Court, Ohio Board of Education, Ohio Senate, and Ohio House of Representatives. So it's dollar per dollar credit. Okay, so joint filing credit automatically calculated by TaxSlayer. It's if both taxpayer and spouse have at least $500 of qualifying income, which ultimately turns out to be earned income because interest income doesn't count, dividends, distributions, capital gains, rents, and royalties, and other qualifying income that has not been used, like, for example, retirement income not used for the retirement income credit could be used to calculate the joint filing credit. TaxSlayer allows us, if the spouse or taxpayer doesn't have enough qualifying income, and we know we can prove that they should have additional qualifying income that somehow didn't flow from federal to state, or strangely enough, maybe didn't show up on federal for some strange reason, because everything should be taxable, that TaxSlayer allows us to input qualifying income in order to get them to meet the $500 threshold. So the earned income tax credit line 9, or sorry, line 13 is 30% of the federal EIC. It's calculated automatically by TaxSlayer, but it'll go right in that area right there. So now we get into homeschool expenses or homeschool expenses credit, basically up to $250 for the amount paid for books and subscriptions, school supplies, computer software and applications, but not expenses for computers or similar electronics. You get 1 credit can be claimed per return, and the taxpayer has been excused by an Ohio school district superintendent for formal homeschooling to qualify for this credit. Copies of all documentation must be submitted. And amazingly enough, in TaxSlayer, in the Ohio section, there's a way to upload a PDF and put it in there. I've never seen this, and I don't know if, it's something we can try in the future, but apparently there's, in the practice lab, there's a place where you can actually upload a document. So line 50.
Ron, I have a question about that.
Uh-huh.
When it says only expenses for dependents who have been excused, what exactly does that mean?
They apply, and apparently they apply and they get a letter from the school district, essentially from the district superintendent, allowing them to homeschool their kids and therefore they can qualify for this credit.
Okay, so they're excused from going to
school. Yeah, to public school, or I guess private school or whatever. So it allows them to homeschool their kids.
Thank you.
Yeah, you're welcome. I don't know, don't have kids, don't know a lot about it, but that's what's kind of in the tax code, tax law. Okay, scholarship donation credit. So donations to a scholarship granting organization which qualifies, see tax, .ohio.gov/SGO for a list of approved scholarship granting organizations. The taxpayer can donate $750 or married filing jointly $1,500 to get a credit. It's a dollar for dollar credit to reduce their Ohio tax. But again, supporting documentation must be submitted, and TaxSlayer allows us to upload a PDF of that supporting documentation if they have a PDF to give us. So, but I don't think we're going to see, I haven't seen this before, but it seems like we could possibly see it. Okay. So line 16, non-chartered, non-public school tuition credit. Okay, must pay tuition for your dependents to an approved, non-chartered, non-public school, up to $1,000 if your federal AGI is less than 50,000. If you make more, you get more. If you earn more than 50,000, then your credit is up to $1,500. Only one credit can be claimed for a return. So eligible non-chartered, non-public schools are approved by the Ohio Department of Education, and for a spreadsheet, you can go to tax.ohio.gov help center frequently asked questions, and there's a series of drop down things you can select and to get that Excel spreadsheet of qualified eligible non-chartered non-public schools. All right, so refundable credits. I guess this has actually gone pretty quick. What time is it? So generally not applicable to our VITA clients. So for example, they have a refundable credit for venture capitalists, a venture capital credit, pass-through entity credit. So your Schedule S, your pass-through entities, your partnerships, your stuff like that, Ohio Historic Preservation Credit, film and theater capital improvement. These are all your refundable credits. And I don't foresee we'll ever have a client that's eligible for a refundable credit. So, and that's the end. I'm gonna stop sharing. So what do you think? I mean, it's kind of a, I don't know, rough. It's unpolished. It's not like Jerry's, but it kind of goes through a whole lot of stuff.
Mr. Ron?
Yeah.
Hi, this is Regina. I got a quick question.
Mhm.
So, and I know I probably shouldn't ask this, but I'm gonna ask anyway. When a person takes a severance package, right? Do they qualify for the retirement credit, or is that still a no because they're not actually retired?
Well, and it may not be part of a retirement plan. If they take a severance check, it's not really a retirement check. It could be separate from any sort of retirement income.
So that's not forcing a person into, so when they're asked to when they're being asked to leave because of, and this is like in part of their retirement package. Does that, I mean,
as I recall, there was something, and I'm bringing up the instructions for Ohio, because I saw some sort of severance or something like that, but I have to say that I don't know.
Just Googled it real quick and I got no severance payments generally do not qualify as retirement income for the Ohio Retirement Income Credit, as they are considered payments for termination of employment rather than income received on account of retirement.
Okay.
So so that is looked at as being
Not eligible for the retirement.
terminated.
Yeah.
Do they look at it as being terminated?
Yeah, that is the language that it's using, termination of employment.
Yeah. So
Okay.
not eligible for the retirement income credit.
Okay. Okay. Thank you.
You're
Good
welcome.
question.
So anything else?
Thanks, Ron. I want to look at the presentation again because of course it's being recorded, so we can all look at it again and kind of let it sink in.
Yeah.
I
But
don't
yeah,
know, Ron,
it's
if you want to provide your email, so if anybody has any questions or anything, they could shoot them at you.
How do I do that?
I
Like
put it in the
chat?
chat. I can put it in the chat. I'm right here. What is it?
Oh, I got it. So it's RES 66-3 at, so like that. Okay.
Yep. Perfect.
So that's my email, and feel free to email me and I can send you the, you know, probably the PowerPoint presentation is too big to email. But I could send you a link so you could download it, or I could just, if you have a question, I could just say tell you what I found out.
If you could save it as a PDF, it might reduce its size.
Right. That's a good idea. It won't have the motion things going in there, the videos, but yeah.
And if you wanted to send that to me, I could forward it out to the.
Okay. It really, I mean, it's just kind of not polished though. It's like, I don't know. It's just kind of, if you could send it out, but it's just kind of, do you think it's worthy of being sent out?
I do.
Okay. Fantastic. So yeah, I'll do that.
Does anybody else have anything that's, any kind of question that's been, kind of bugging them?
Mm.
Ohio or federal?
Yeah. So, I mean, I'm gonna do more research on that AARP flow chart to see just, how things kind of play with the numbers and stuff like that, and get ideas on what kind of income levels would most likely benefit from those, you know, deductions, but that's about it.
Well, I thank you very much. I think this is a good presentation, and I think it would be helpful moving forward to, in addition to our, basic tax law training, to include some of this state information as well, since we don't get very well trained on the state side.
Okay. Well, thanks, Amy. All right. Well, everybody have a good night, and see you volunteering.
Thanks, Ron. Nicely done.
Thanks so much.
Okay. Awesome.
Good
Thanks.
to see you all.
Have a good evening. Thank you.
Thanks.